Okay, now this is a very interesting question. We will be solving this 10 mark question. Uh, so this 10 marks question is a tax planning and it has a subparts. As you see, there are five requirements. Five requirements are there. First requirement is about, let's say, uh, first requirement is about explain if there would have any capital gain tax advantage or disadvantage to accrued of disposing his portfolio of quoted shares on 1st April 2024 rather than disposing on them 10 April 2024. This is very important, right? Just give me 1 second. I'll be coming. Now, see what is the concept? What is the requirement? Requirement is okay, what if disposing of portfolio on, there are two options. I mean, there are 3 marks. Make it very simplified. Do not confuse. Focus on the requirement and calculation of tax 4 year and should if there are any tax saving. Okay, let me just give you an idea. If crude sell dispose shares on 1st April 2024 dispose shares on 10 April 2024. Now see the difference. Difference is very clear. If he is disposing his shares, just give that to heads. If he is disposing the shares on 1st April 2024, it will fall to tax year 23-24. Disposal is going to be part of tax year 23-24. Right? But if he is selling this shares in the tax year, this will fall tax year 24-25. Now this is very important. Now we are going toward the data. You should assume that tax rate and allowances. Okay, in the whole question, in the whole scenario, we'll be applying the tax rate and all that. This is the same. This you have to use the same tax data and all that. You'll be using the same, right? You'll be using the same, the rates and relevant all things for the tax year 24-25 relevant. Okay, so following information is available for the 4 years from 2023 to 2024 and all that. They have given a data of 4 years. In 2022, mean 22 to 23, 23 to 22 for 2 years, employed at a gross salary of 200,000. It means from income tax perspective, he's an additional rate taxpayer. And his tax is already calculated and collected through pay. And he also received the dividend income of 5,000 as well in those 2 years, right? So it means he was the additional rate taxpayer. So listen very carefully. Listen very carefully. It means if he is going to sell the shares in 23 and 24, the CGT rate will be considering the fact he's already on the additional rate taxpayer. So tax rate for the CGT will be 20%. Tax rate will not be, because if your gains are falling in the basic rate, then 10%. He's selling shares, right? It's not residential and all that. If your gains are falling in, let's say, cross the higher or additional band, then your gains are always going to be taxed at the 20%. So in the 23-24, his gains are going to be taxed at the 20%. What about 24 and 25? In the 24 and 25, ceased employment and he take a career break. Did not work. But he received dividend income, and dividend income is 100,000. And that was the only income of, let's say, he's having. So it means, again, dividend income of 1 lakh, less personal allowance, still he's a higher rate taxpayer. So it means in the both cases, CGT rate will be 20%. CGT rate will be 20%. So there is no any tax saving. CGT rate will be 20% in both cases. Why? Because in 23-24 he was a additional rate taxpayer. In the 24-25 he is a higher rate taxpayer. So CGT rate, now he's selling the portfolio of quoted shares. We have to calculate the liability as well. See, we have to calculate the liability as well. He's selling shares, entire shares he's selling. Disposal result in chargeable gain. Okay, chargeable gains will be, in both cases, chargeable gains will be 120,000, also 120,000. And we have to assume tax rate 24-25. There will be annual exemption of 3,000 in both cases again. So he will be having a taxable gains. As he does not have any other chargeable disposal, that's why I have assumed that there is an annual exemption available. So we'll be applying 20% rate same. So it means you have to briefly explain what will be the CGT liability. This into 20%. There are 3 marks and they are not difficult. Just take time. That's why I often tell students that solve this question in the end. Solve this question as a last, so you'll be having enough time. It requires time. It's a planning question. So this will be your again 20%. So it means just write down, explain briefly that there is no saving regarding CGT liability, whether Crore sell his shares on 1st April 24 or 10 April 24. But there is a one advantage. If you are going to sell your shares in 1st April, it will fall in 23-24 and your CGT liability will be on 31st January 2025. But if you are selling your shares on 10 April, the CGT liability, it will fall in 24 and CGT liability will be 31st December 2026. So disposal is more beneficial because it will postpone the payment of CGT. You'll be writing here, although most beneficial is sell the shares on 10 April 2024, as it will give extra time to Crore to pay CGT liabilities, as due date for 23-24 disposals is 31st January 2025, but for 24-25 disposals, liabilities will be paid on 31st December 2026. So this is beneficial from cash flow perspective. You'll be paying tax after, let's say, you'll be getting further 12 months as well. So you got the 3 marks. You got 3 marks. Now let's come to the second part. What I have done, I have not just calculated the liabilities, I have also explained as well. I have told them which is most beneficial. Okay, 3 marks we are done. Now, what this is? B part A. B part A seems like very straightforward. Accrued income tax liability. We'll be calculating income tax liability for tax year 24-25. So only income tax liability. For the 24-25, just focus on this data. As he was not receiving any form of employment income, although the only income he's having a dividend income. Prepare a full income tax computation. So it means dividend income is only source. So the dividend income is actually 100,000, right? There are 4 marks, maybe most probably 2 marks for the part A. 100,000. you'll be getting, as your ANI is mean equal to 100,000, not greater than, so you'll be getting full personal allowance. This will be a taxable income. Right? Higher rate taxpayer. So first of all, income tax liability on the first 500 will be 0. 37,700 minus 500 into 33.75%, right? 33.75 as a higher rate, right? And sorry, we'll be applying higher rate on the another part. It's fall in the basic rate, right? So 8.75%. On the above amount, what is the above amount? Is actually 87430 minus 500 minus 37,200. Right? See this 37,200. Now this is falling in additional band. And for the additional band, the rate is 33.75. Right? Just do the calculations. Just put equal sign. You'll get the answers. Use of practice platform, use of paper, the basic formulas and all that. This is very important. Just some. So you got the answer of this. This is your total income tax liability. Right? Now, if instead of 100,000 dividend income is 2024 and 5. In this case, as he has received the dividend income of 100,000 in 24 and 25, what they are saying, instead of this amount, Croat had received additional dividend of 50,000 during the both of tax year. What they are trying to say? They are trying to say that he has received 100,000 dividend in the 24 and 25. Instead of that, what if he has received 250,000 installments in the 22-23 tax year and the 23-24 tax year? Show how much extra income tax would have been paid. Right now, in the tax year 24-25, he has received a dividend of 100,000 as there is no other income. He has paid an income tax liability of 20,039 on the dividend. What if the same amount of dividend he has received in the back of 2 tax years, how much additional income tax would have been paid? Now, let's work on here. B part 2. It's very important and it's very easy. It's not difficult, just focus. I'll be doing this. B part 2. Additional income tax being paid. Now listen very, very carefully. In last tax year, mean 22-23 and also 23-24, what if he has received 50,000 dividend, how much tax he should be paying extra? Now listen very carefully. In the last two tax years, he was already having a gross salary of 200,000. So it means he was an additional rate taxpayer. There is no personal allowance. Also, the 500 of dividend income will be 0 as he's already receiving the 5,000 dividend in the previous 2 tax years as well. So it means he's already utilizing the dividend nil rate band as well. Dividend nil rate band of 500 as well. So that means this 50,000 of both are falling in additional band. The both are going to fall in additional tax rate band. Why? Because he's already additional tax rate payer and there will be a no dividend nil rate band as well. No dividend nil rate band as well. Why? Because he's already having a 5,000 dividend in the previous 2 tax year. He's already utilizing his 500 dividend nil rate band. It means the additional rate is 39.35%. So it means they will be paying total taxes. This 50,000 into 39.3. Same 50,000 into this. Right? Listen very carefully. So it means if they have received this 50,000 in previous 2 tax years, they will be paying this amount of total income tax. Add this. And right now, they have received this dividend in 24-25. How much of income tax they have paid on this dividend? This. This was the dividend they have paid right now. So what amount of additional extra income tax would have been paid? This is the extra income tax. You will get 4 marks of it. Now, this is called tax planning. Right now, in the 24-25, he has received dividend of 100,000. He has paid this amount of income tax. What if that same 100,000 he has received in the past 2 years as a 50,000, he will be paying tax at 39.35. Why? Because he's already in the 2 last tax years, he's already having a additional rate taxpayer and he has already utilized the 500 amount of dividend nil band. There are a lot of students who are going to ask, so why you are not applied the 500 into 0? Because they have already used, here they have no other income. We have applied the 500 into 0. They have already 5,000 of, he's already having a 5,000 of dividend income in the previous 2 tax year. So he already applied the 0%, used the 0% related band as well, the 500. So see, this is the extra income, the 4 and 3, 7 marks we are done with it. Now let's go to the last part. What is the last part is about? Remember always that income tax liability in 24 and 25 is 20,039. Okay, now based on his income in 24 and 25, calculate gross payment on account for 25 and 26. See part A, payment on account for 25 and 26. Remember what are the rules? Whenever you are making payment on account for the 25 and 26, your payment on account should be calculated on the previous year income tax liability, previous year relevant amount. So see, they have already given based on, we are paying payment on account for the 25 and 26, but amount will be based on the 24 and 25 liabilities. So what are the liabilities for the 24 and 25? What was the relevant amount? Income tax liability. I guess we have calculated as he's only having a income tax of dividend income, and we have already calculated the liability. What was the liability? 20,039. Remember, capital gain is irrelevant because capital gain is payable in a one form of payment. We do not pay any payment on account on the capital gains. So it means his total relevant amount is this. As they have no paid any payee or something, right? In the 24 and 25, because it is a dividend income, he will be paying by himself tax. So what will be the payment on account? Half. Right? Payment on account, stating also the relevant due date as well. For the 25-26 due dates of payment on account will be, first payment on account will be as 25-26 tax year will be running from 6 April 2025 to 5th April 2026. So first payment on account will be 31st January 2026. Second payment on account will be 31st July 2026. We got 2 marks. Now, if you just read this data, Croat commenced employment income in 25 and 26. Gross salary is 175. Again, he's an additional rate taxpayer. With all of the income tax on the collected through payee, all of the tax will be collected at source through payee. And he does not have any other income. He does not have any other income. When you are supposed to pay payment on account, when your taxes are not collected through payee, right? There are certain rules. Explain why Croat can make a claim to reduce his payment on account for 25-26 to 0. Mean why he can, although for the 25-26, according to our calculation, he's supposed to pay payment on account on 10,020 on the base of previous amount. But does he have option to claim for a zero amount of, let's say, yes, Croat can make a claim regarding payment on accounts to 0. Why? Because his whole amount of tax on this salary is collected through pay. So it means he will not be having any liability to pay to the HMRC. So you can just write, yes, Croat does have option to claim a reduction of payment on account to 0 because all of his income tax, all of the income tax on his salary will be collected through pay, also does not having any other income. So this is 10 marks. 1 mark relates to this. See how you are supposed to solve your tax planning question. This is the right way. Just do not take tension. Just do not take pressurize yourself. Just be calm. Don't get panic at all. Just make sure that read the requirement, understand what they are trying to say. Wishing you best of luck.